In this video, I am going to do a mini stock analysis. It is not a full analysis of a company. So we're going to go through some of the metrics that one should go through before they decide to purchase a stock. So let's get started. Hey investors, it's Dr. Marcia from Bookworm Investment Club. I'm the creator and the founder of Bookworm, and it's where we help women learn to invest in the stock market and build a profitable stock portfolio with the idea of sometime in the future being able to use that portfolio as your paycheck. I am going to do a mini stock analysis. It is not a full analysis of a company. So we're going to go through some of the metrics that one should go through before they decide to purchase a stock. So let's get started. The company that got our attention here at Bookworm is a company that you've probably heard of. It is called Lockheed Martin. Lockheed Martin is the largest defense contractor globally, and it operates through 4 different segments: Aeronautics, Missiles and Fire Control, Rotary, and Mission Systems and Space. So what does all this mean? Well, Lockheed Martin manufactures products that support our armed forces when it comes to protecting this country. They make products like the helicopters, I think this is Sikorsky Black Hawk helicopters, F-1 fighter jets, and even ships. And this is just a small portion of the products that they make. But what about us investors? If we decide that, this is a company that interests me and that I'm interested in owning, what do I need to know about this company before I invest? Well, let's start off with one of the metrics, and one of the metrics is growth. We want to know, is this company growing? Is the company growing the revenues and its earnings? So this is a graph from Morningstar. It's one of the tools that we use at Bookworm. And if we look at this graph, the horizontal axis tells us the years, and the vertical axis tells us about the money. And we can see from this graph that this company in the last 3 years, from 2018 to 2020, has consistently increased their revenue. So we have a nice trend line here that's going upward. And the same thing with the net income or the earnings. We see an increase in the earnings year over year from 2018 to 2020. So this is a plus. The other metric we want to look at is our profitability. And one of the metrics is the return on equity, or the ROE. It's not the only metric when we look at profitability, but this is the one I'm introducing to you now. The ROE will tell us how effective management is in using our money, the shareholders' money, to make a profit. And when we come across a word that we do not understand, one of the other resource tools that we use is Investopedia. Investopedia states that we as investors can consider an ROA of about 14%, which is the long-term average of the S&P 500, an acceptable ratio. Well, look what the ROE of Lockheed Martin is, 142%. So that's pretty impressive also. We also want to look at the stock price and also valuation. At the time that I am doing this video, the stock price is $380.16. And the 52-week high and low ranges from $319 to $402. So if we decide that This is a company that I'm willing to purchase. We know that we're going to be purchasing it near the 52-week high, and that the price to earnings ratio, the PE ratio, is 15.29, which is well below the current market PE of 37. This is another graph or chart from Morningstar that talks about the valuation. And the analysts who are looking at Lockheed Martin tell us that they think that this is a 4-star stock. So what does that mean? Morningstar has a 1 to 5-star rating system. If they consider a company that is overvalued, that company is given a 1 rating. If they think a company is highly undervalued, then that company is given a 5-star rating. So with a 4-star rating, the analysts consider Lockheed Martin to be a undervalued company, which is what the type of companies that we like to invest in either fairly valued company or undervalued company. They consider a fair value price of Lockheed Martin, $436 a share. And we know that currently it's 380. So that is one of the reasons why it is considered an undervalued stock. Some other things we want to look at, we can get from the company website. It's the investor relations section. And we like to look at who's on the executive team, who's on the board of directors. Do they have diversity there? Are there women running the company? Are there people of color involved in running the company? And you can get that information from the company website. You can also read about recent presentation and news and events, things that are going on with the company from the company website. So what we can see right now that from the metrics we've talked about so far, Lockheed Martin seems to be a quality company for us to invest in. Now, let me say this. This is not a recommendation to buy, sell, or hold. These are just some of the things that you can look at when it comes to evaluating the stock prior to purchasing it. Since Lockheed Martin is a dividend stock, there is some dividend information that we need to know about. Lockheed Martin is considered a dividend contender, and a dividend contender is a company that has at least increased its dividend consistently from 10 to at least 24 years. And so Lockheed Martin has increased their dividends for 18 years, 18 consecutive years. They have raised their dividends. So what does that look like? If we look at another source from Morningstar, this is a graph which looks at the years 2014 all the way up to the current time period. And as we can see, they started the dividends at $5.49 in 2014. And every single year after that, they have increased their dividends. And now these are annual dividends up until the point where this year they're giving $10.40 per share for every share that you own of Lockheed Martin. And once again, this is annually. And two other things that we need to consider when we talk about dividend stocks are the growth rate of the dividend. And this is a graph from Simply Safe Dividend, which is another tool that we use at Bookworm Investment Club. And we can see that currently the dividend growth rate is 8.3%. And yes, it's slowing down from the past 20 years, but 8.3% is still a very good growth rate for any type of dividend. And lastly, we want to look at the dividend yield. And the dividend yield, when we look at the total return that we're getting from a company, We want to look at the price appreciation and also what we're getting in form of dividend. The dividend yield will tell us that. And we'd like to see a dividend yield of at least 2 to 4%. But once again, that also depends on what is going on with the market. And so there you have it. Some metrics that you can start looking at when you decide this is a company I want to buy. Let me see if the company is growing, if the company is profitable. What's the stock price? Is it fairly valued or undervalued? And if it is a dividend growth stock, some of the things that we need to look at when it comes to investing in a company, we want to know the what's the consecutive years that this company has raised its dividend? What's the growth rate? What's the dividend yield? So that's it for now. I hope that you have gotten something out of this video that we've done here at Bookworm. I invite you to come to the website and see some of the courses that we're offering to help you to grow your portfolio and start to invest in good quality companies. And so we're going to stop the video now and thank you for your attention. Take care and keep investing.